Hello there. Welcome to another edition of the Breakthrough Real Estate Investing Podcast. I'm your only host today, Sandy McKay. Rob breaks off for this week, and happy to have a great guest here on standby waiting to come in with us. We're going to talk about some awesome things today. As always, go over to iTunes, check out all of our shows. 124 of them now that you can go listen to and get some great knowledge there. We are also live on Facebook and YouTube every week, Wednesday, 10:30 a.m. Eastern time. And so join us there, get in on the action, and ask us some questions live on the show if you like that way. And as always, also go over to our website, breakthrough.reipodcast.ca. You can get all of our shows there as well, like, comment, share, etc. And also jump on our email list there. You'll get a copy of our guide there, The Ultimate Strategy for Building Wealth Through Real Estate. You also get access to all of our shows as they come out. So you'll get notified. You'll get access to all of our live events, anything like that we're doing. Rob does a lot of street property tours, so get access to those as well, of course. And so go do that if you haven't already, and reach out to us if you've got some recommendations, improvements for the show, some guests, maybe something you want to see on the show that we haven't talked about. Feel free to reach out to us at info@breakthrough.reipodcast.ca, and we would love to take your recommendations and get some great content for you guys. We've got guests from all over the country and some awesome stuff to share and keep sharing. So love to hear your feedback. Let us know how we're doing, and we will always continuously try to make improvements on our end. We've got a great show lined up. I'm going to bring on here Omar Khan in a second here, and then we've got a few others lined up towards the end of the show. We're going to get some feedback on what Omar is going to talk to us about here and get their firsthand knowledge and experiences in this strategy that we're going to talk about here with Omar Khan. So I'll bring on Omar here now. Welcome to the show, Omar.
Thank you, Sandy. Thanks for having me.
Always a pleasure. We have done a show before, so this will have you back again because we've had so much good feedback, and it's almost like a polarizing thing in a way. It's kind of an interesting topic to chat about because it isn't directly real estate investing, but it's an awesome strategy hand in hand with real estate to build wealth, build cash flow, that sort of thing. So I know you're going to get all into that. I want to introduce you a little bit to the audience first before we get going. Omar began his 15 plus year now financial services career in a brokerage arm of a Schedule I Canadian bank, and through will and determination quickly rose through the ranks of the industry to RVP in a widely known mutual fund company. After that, he became a full-time real estate investor and a derivatives trader. And Omar does all this still to this day. He holds a bachelor degree in economics from the University of Toronto, currently spends his professional life trading derivatives, building his real estate portfolio, and promoting the values of Theta Trading Corporation, which is a company we'll talk about here today with him as well on the show. So again, welcome, Omar, and really excited to dig deeper into this strategy you've got and hear about what's been going on, especially during, we're kind of, it feels like we're kind of getting to the tail end of this whole pandemic thing, but I know there's some,
I hope so.
There's been some interesting, obviously in the stock world and, that there's economy in general, there's been some interesting stuff going on for the last 4 or 5, 6 months. So I'd love to hear a little bit about that too, as we go here, of how that maybe affected you, maybe not. And if the strategy's changed at all. We'll get more into that as we go, but why don't you start just to give a little more perspective on this and who you are. Why don't you start about your real estate investing journey and what that looked like up to this point?
Yeah, so a little bit about my background. I'm a stock guy. I'm not a real estate guy, okay? So I didn't know anything about real estate. All I knew is that I didn't have any money back then, right? And I started to amass a bunch of money in my career since I started working. And I had all my money in the stock market in the 2008-2009 recession, okay? So the 2008-2009 recession hit, and the stock market got just murdered, right? It just got, so did the real estate market, by the way. But what I realized is I need to have more asset categories than just one, okay? Because I understand the world of stocks real well. Didn't understand real estate at all. And real estate, by the way, is nowhere near as complicated, okay? It's far easier. It's more intensive in terms of time, but it's not as complicated as the market can be. So I realized that I need to buy some real estate. So I joined REI, right, where I met all these fine gentlemen. So I joined REI, and I learned about real estate. I learned the right way to buy real estate, which was great. And I amassed a substantial real estate portfolio, which I hold to this day. I've got a sizable real estate portfolio, about 15 million or so. So I amassed that over the years, and I had to completely teach myself about real estate. I didn't know anything about real estate. Um, but what I will tell people who invest in real estate is don't just dismiss the stock market. I use the stock market to come up with all of my down payments and my living for my lifestyle in order to come up with all this stuff. And real estate is great for wealth creation. It really is. The main reason why, Sandy, you know this, right? It's the leverage ratio, right? So let's say you're able to leverage, you're like 35% down payment or 30% down payment, and you're 60 or 65 or 70% is borrowed. Well, if you get a 5% appreciation or 4% appreciation, that is super amplified because of the leverage ratio. So your returns wind up being fairly substantial. You combine that with a little bit of cash flow, a little bit of mortgage pay down, and real estate returns are pretty good. And they're quite steady. So they're a great way to create wealth. What real estate is poor at is cash flow. It's terrible at cash flow, because if you want to continually build your real estate portfolio, you're going to have to refi the BREI method. That's going to eat up a lot of your capital. I've done that many times. So it's going to chew up a lot of your capital, and it's not going to provide you with a lot of cash flow. The market, however, the stock market, is the opposite. It can provide you with tons of cash flow, right, through the use of options. And that's what I do. I use the options to come up with a cash flow to buy more properties. And then I let the positive cash flow from the properties filter back into my trading account, which then spits out more capital to acquire more real estate. And you rinse and repeat until desired outcome is achieved. Pretty simple. Straightforward, Sandy, or what?
Well, it's straightforward. Yeah, it's pretty straightforward. I mean, I agree with you. The cash flow piece is a tough.
Yeah, it's tough.
Everyone talks about finding cash flow, right, in the real estate investment world, and everyone endorses that, and you want to have cash flow. And the reality is, in Great Southern Ontario, basically almost anywhere, it's pretty darn tough.
It's
almost anywhere in Canada, it's pretty tough. Yeah. Or it's at least very tough to marry the two, right? Cash flow and wealth building appreciation, right? It's very hard to get both of those, and it's almost impossible to get both of those. So, the wealth building side of real estate is amazing. Southern Ontario has been incredible. You get your tenants in there, you pay down your mortgage. Luckily, we've had a crazy run of appreciation, and nobody's really throwing the money in their bank account really right away. They're watching it grow and then doing that over time. This strategy obviously kind of fills that gap, right? It gets you into that cash flow side of it where you can, live off it. And I know you will talk a bit more about that and what your lifestyle kind of looks with this strategy, because that's really exciting, I think, for people to understand and what that could look like and how you can kind of create your own version of that. And it's pretty cool. So we're going to dive deeper into on that. So on the real estate side, are you still buying properties, or have you kind of put a pause on that? I know you've been focused on building up your company here with the.
No, I bought one last week, actually.
There you go. Perfect.
So I still buy real estate, so there's no problem there. I bought a property last week. It was it's a recreational property, but I bought a property last week which I'll rent out when I'm not there. But it's got a good recreational use to it. Hopefully, some decent cash flow as well. So I love real estate. It's real estate. You're able to control a large asset with a small sum of money. That's the key with real estate. Which even a smaller rate of appreciation, and you get some substantial returns, which is great. What people fail to realize about real estate, and this is why I tell people, educate yourself on more than one asset category. So since the year about 2000 until now 2020, we're in a 20-year bull market for real estate, okay? That's a long time. And what people have short memories. They're thinking the real estate market's going to go up forever. It does not work that way, okay? If you look at the period from 1987 to about 2000, real estate didn't do squat in Southern Ontario. Nothing. In fact, it peaked, troughed, and did not recover until almost 2000. So you had about 12 or 13 years there where the real estate market didn't do a whole lot. Now, I'm not saying real estate's a poor investment, because even in that time frame, had you had real estate, you'd still have cash flow, you'd still have mortgage pay down, you just wouldn't have the appreciation component. So what I'm trying to get at is there's no perfect investment, okay? Whether that be the stock market or the real estate market, there's no perfect investment. But what you should do is you should learn about various asset categories so that you know how to make money from more than one source. If you rely on just one, like real estate, or like I had relied on just the stock market, it can end poorly, and that's the consideration.
So, so you're still buying real estate, obviously. That's great, and you're obviously fully, diving deep on the stock options trading, even more so than you had been in the past. Why don't you explain a little deeper what the strategy really is and how that works, and how you utilize it, obviously, and how you've built it from. I assume you started with not a whole lot of money doing that strategy, or you probably bounced around from different strategies. And how did you
Yeah.
actually end up into this strategy, I guess? And then also just what does it look like as well?
Yeah, so it's a cool journey. I started trading about 22 years ago, and nobody taught me how to trade. Right, I had to teach myself how to learn how to do this, how to trade. So I started trading, and I can tell you, Sandy, I made tons of mistakes, like tons of mistakes. I was doing all kinds of things I shouldn't have been doing. In hindsight, looking back at it, and doing risky stuff, didn't know what I was doing. And over the years, you start to read and develop your own philosophy of what works really, really well for you. And over the years, myself and my business partner Matthew Todman, we developed a philosophy that works really, really well for us. So what we do essentially, Sandy, is simple as this. The best performing stocks in the stock market are generally your dividend paying stocks, okay? They're called dividend aristocrats, okay? Now, the stock market in the last 50 years has averaged about 10% a year. So pretty good return, would you say?
Awesome return.
10% a year. But the problem with the stock market is you can't leverage that, okay? So a 10% return, but non-leverage. Well, you can leverage. It's just dangerous because you get this thing called a margin call, perhaps that could happen to you. Not a wise idea to leverage yourself into the stock market. Anyways, 10% rate of return, but these dividend aristocrats, these dividend paying stocks generally tend to perform a little bit better than the market. So let's say they perform at 13 or 14% a year. That's generally what they've done over time. Okay, so now we know that. Okay, so what we do is we use options on these dividend paying stocks, these dividend aristocrats. Okay, so I'll give you an example. Sandy, give me a stock that you really like. Okay, you love it. It pays a dividend. You think it's a great company. Pick one.
Visa.
Visa, perfect example. There you go. Okay, so everybody pretty much I know has a Visa. Pretty much everyone you know has a Visa. And they're a very profitable company, and they've been around, and they're probably going to be around for a long time. Okay, so Visa currently is trading at around $200. It's a great example, actually, Sandy. All right, now so Visa's trading at $200.
I've been diving in on this stuff. I know.
Okay,
I know a little bit. Yeah, I know.
All right, okay. So you say, you know what? I love Visa as a company. Pays me a dividend. Great company, great future, et cetera, et cetera. So you've determined that. Okay. Once you've determined that, let's say you go in and say, you know what? Visa's at $200. I'm going to say I am going to agree to buy Visa at $190. So I'm not actually going to buy it. I'm just going to agree to buy it. Okay. So I love Visa at $200. But what if I say, you know what? A month from now, I'll buy Visa for $190. Okay. Sweet deal. Right?
Sounds good to me. Yeah, sounds pretty fair.
Sounds pretty fair. Now, let's say someone pays you like $4 a share to do that. Now, somebody is going to pay you $4 a share, and I'm just approximating. I haven't actually checked the quote. But someone's going to pay you, let's say, $4 a share just because you agreed to buy Visa, a stock that you have no problem owning at $200. Okay? You're going to be way happier to own it at $190, and you got paid another $4 on top of that, right? So you're really going to get it for $186. And if it doesn't go to $190, Sandy, you just keep the $4 and you do it again next month and next month and next month. And the worst thing that'll happen to you, Sandy, is that you own Visa at a discount. If that's a level of risk you can live with, and ask yourself, is that the level of risk I can live with? If it is, then this is a strategy you should definitely look at. So we make monthly cash flow just for agreeing to buy stocks we want to buy, not actually buying them, just for agreeing to buy them. Now, you must be thinking, why would someone pay us that much money just for agreeing to buy that stock at a discount? There's a few reasons why. Most of the time, people are just gambling. They're hoping to turn a small amount of money into a large amount of money. Second thing is this. Let's say a guy owns, some person owns a few hundred shares of Visa. Let's say, I don't know, whatever it might be. And they say, well, I got to make sure I'm buying a house in 6 months. I got to make sure that I have the down payment for the house, right? And in order to have that down payment, they got to make sure they can get no less than $190 a share, okay? So what they'll do is they'll buy insurance, and that's that $4 that they pay. They'll pay $4 to make sure that no matter what happens to Visa, that they can still get $190 a share. The difference is for us, we're more than happy to take their $4 a share because we have no problem owning a Visa at $190. Does that make sense, Sandy?
It's making sense to me, yeah.
Right,
sure.
Simple concept. And I'll give you an analogy how it works in the real estate market. Imagine this worked in the real estate market, okay? So imagine you stroll in downtown Hamilton and you run across a duplex that's $500K. That might be a little bit underpriced now, but let's just say for the sake of simplicity, $500K. All right. If we know we want to buy this thing at $500K, it cash flows, the numbers make sense, et cetera, et cetera. But what if we say, you know what? Why don't we agree to buy this for $490 in a month from now? Okay? Not actually buy it, just agree to buy it. And what if someone paid you $10,000, Sandy, just for agreeing to buy a duplex for $10,000 below its current market value. Would you take that deal?
Yeah, I'm in.
Yeah, I'm in. Exactly. That's the whole point, right? Because the worst thing that'll happen to you, Sandy, is you're going to have to buy it for 490,000, and you got the 10 grand. Now, if it doesn't go to 490 grand, you keep the 10 grand, and you can do it again next month. Okay. So imagine that analogy I gave you and translate that into the stock market. Got it? So we just simply agree to buy these good quality companies, these dividend paying companies, at a discount, and we get paid to do so. So that's how it works. And that's to give you an analogy in real estate, how it makes sense in the real estate world and why it's such a good marriage between the two asset categories. Because if you've got stocks here and you've got your real estate here, well, let's say all the positive cash flow that's coming from your real estate portfolio, well, you can just siphon that off into your trading account and agree to buy more of these stocks and get paid more and more and more. And every time you've got a few bucks extra in there, you take it out and you can roll it back into your into buying more real estate.
Pass it back and forth. You kind of get the best of both worlds. It feels like we talked about at the start, kind of fills that cash flow gap, right?
It fills the cash flow gap, yeah.
Which a lot of real estate investors, especially now, are probably seeing it, and would probably love more cash flow, but they're just kind of stuck where they're gonna get it, right?
Yeah.
So I love that analogy too, because that always, we have a ton of real estate investor listeners, obviously, and that's something that I think the concept that makes it really, really obvious and easy to understand is why would he not be okay with buying it in a month or two down the road with
for a discount.
Yeah.
Now, and get paid really nicely to do that too, right?
And get paid to do it.
Yeah,
right?
It's a great deal.
And what about so like a lot of people I think probably think in those scenarios, what's the worst thing that can happen in that? And maybe the worst is that you buy it for a discount, but maybe the worst is even worse than that. What if the market falls out or drops or something?
It didn't during coronavirus. It did, absolutely. This is exactly what happened.
Why don't you tell us a little bit about that then? What's it been like over the last 4 or 5 months around all that? And did you get stuck with anything? Like, what was the worst thing that happened, or what was the worst thing that can happen in that kind of hopefully once in a
once in a lifetime? Once in a lifetime. Let's hope it's once in a lifetime. I don't want to go through this again. But because of the way we trade, we've actually made money for the year, so we're happy, we're positive. But here's what happened. We agreed to buy a bunch of stocks, let's say around February, early March, and then everything's going hunky-dory. And then, bam, coronavirus hits. Stock market goes down 35%. Wow. You're like, my God. So you're down huge. But remember the worst thing that'll happen to us, that we'll own a bunch of stocks at a discounted price and we got paid to do so. Now, last year we made a ton of money. So we had a huge buffer. Okay. Now the market went down. We're like, it happens, okay? And no one was expecting the pandemic, went down 35%. But because we only agreed to buy these high-quality companies, like these dividend-paying companies, they tend to rebound quickly after a recession or during a market correction, okay? The crappier companies, your cannabis companies and, some no-name startup company that you haven't heard of and penny stocks, they're the worst. They don't recover very well at all. But these dividend-paying companies like let's say Visa or Microsoft or, Enbridge, they tend to recover quite quickly. And that's exactly what happened. Market went down 35%. And because we knew these were high quality companies, Sandy, we were able to agree to buy even more of them and buy more of them when they were lower. The whole saying is buy low, sell high. It's hard to do psychologically when you're facing a 35% correction in the middle of a pandemic, but that's the concept. Buy low, sell high. So during the pandemic, we simply bought more of these companies. And now the market has fully recovered. It is actually today at an all-time high. Can you imagine that? All-time high.
Came back fast.
It came back fast because what we found is during COVID, there's certain companies that are really going to benefit from COVID. Right? And there's certain companies that are really going to suffer. And because we traded these high-quality companies, a lot of them are actually benefiting tremendously from COVID. If you look at the likes of, Visa, for example, how much more online shopping is occurring?
Right, which is all Visa and credit, right? It's all credit cards.
Yeah, and also most people are not aware that Visa makes a lot more money per transaction online than they do in person. Okay, so if you have a shift to online, well, their revenues and their profits have gone up. Okay, Facebook, tons of people are on Facebook now. Apple, Visa, Microsoft, Amazon, all these companies let's call them COVID. They benefited from COVID. COVID didn't actually affect them. So we stick to these really high quality stocks, Andy, and they've recovered through the pandemic. So was it dicey? Sure it was, right? You're down 35%. We weren't down 35% because remember, we always agree to buy it at a discount. So we had that discount plus we had the payment, that premium we received. So we're probably down about 25% at one point in time. not the end of the world. And when you're able to buy more when the eventual recovery comes, you're actually able to come out significantly on top. But you have to know how the asset category works in order to benefit from that. And that's the whole point, right? It's the same thing with real estate. You have to educate yourself.
And so, are you looking at that? How long of an outlook are you really taking when you're investing into these stock options? Are you looking at down the road, like many years? Like, because I know if you feel like in real estate, even if you take a hit and it's down 10%, 20%, it feels bad at the moment, but you kind of have that longer term outlook, and it's it's just part of the whole process, right? The ups and downs and ebbs and flows. But is that kind of similar in this world too? Do you look at it and say, well, I'm down 25%, but I know over the time it's going to trend upwards anyways, so it always rebounds, right? So
exactly, and that's what history teaches us, right? You never know for certain that's if the stock market's going to rebound or the real estate market's going to rebound. But history has taught us that eventually it does rebound.
It will eventually. It might not be today, or it might be 10 years, but it's going to eventually.
It'll eventually rebound. And that's exactly what happened this time. The stock market retracted by 35%, and whatever, 6 months later, here we are, and it's fully recovered, which is phenomenal if you think about it, right? To fully recover within a 6 month time frame to all the losses, because the stock market is a forward-looking mechanism, okay? It looks forward 12 months approximately. It's going to say, in 12 months from now, what is the economy going to be like? What are earnings of these companies going to be like? And because the stock market looks forward, it's pricing in a rosier picture in 12 months, a better economy, lower unemployment, and better corporate profits. Okay, so it's pricing that in today. And that's why you're seeing an all-time high in the stock market, because the stock market is saying a year from now, things are going to be good. Okay, the real estate market is a lagging indicator. Okay, it reacts after the market. Okay. So what you're going to see is the real estate market, if you guys have noticed, it's actually trended upwards even during this pandemic. Yeah. But now that these mortgage deferrals are over and delinquencies are going to start probably hitting a bit more, you might see a retractment in the real estate market. I don't think it's going to be a prolonged retractment because, look at interest rates. It's almost low, they're almost free. I had a buddy of mine, he refied a couple of days ago, 5-year 1.8%. Can you imagine? 1.8%. And he's like, should I go with a variable? It's at 1.45. I was like, wow, that is insane, right? Those are some crazy numbers. So it's almost free, right?
Yeah.
So that will prop up the real estate market, even if you have a poor economy, right? Because there will be enough demand that'll prop it up because of the low cost of borrowing. But the thing with to compare and contrast the real estate market to the stock market is, again, going back to the same thing. Even in real estate, in a low interest rate environment, you could have a correction, okay, and that could be upon us in the next little while because of all these delinquencies and in these foreclosures that might be coming up. We just don't know how bad the economy is yet, but the stock market is telling us something. The stock market is telling us. If you guys are, by the way, you guys are real estate guys. I understand. Luckily, I understand both worlds, which is what I'm trying to do to all the real estate investors. Try to understand the stock market world because it actually does relate to the real estate market. The stock market is screaming that the economy is going to recover a year from now. What do you think that's going to mean for the real estate market?
It can't be anything negative.
It can't be anything negative. Exactly. That's the idea. So a year from now, if the economy recovers and we have a low interest rate environment, like, for example, in Canada, I believe we just borrowed roughly $300 billion. We added that to the national debt.
Right.
Okay. Now, do you think the central banks around the world, US, Canada, Europe, etc., Japan, these large economies, do you think they're going to raise interest rates? They've got a ton of new debt to pay back.
Yeah, you wouldn't think so.
No, they're definitely not going to raise rates. They're going to say rates going to stay low for a long time. So you might see a prolonged market recovery in the real estate market, because if the low interest rate environment exists for a while and you have a recovery in the job market, which the stock market is saying that, yes, the stock market, remember, it's a forward-looking mechanism. It's saying that the economy will be recovered in a year, right? Now, if that's the case and you have a low interest rate environment, imagine what that's going to do to the real estate market, okay? So it's kind of cool how they're both work together, and you can get a lot of tidbits of knowledge from the stock market that can translate into your real estate investing. And not to mention, you can make a ton of money from the stock market as well, but you have to kind of understand it. The problem with real estate investors, and I know this because I've dealt with hundreds of real estate investors, and I came from the stock world, right? And I learned real estate. They are so quick to dismiss real estate, stock market. They're like, oh, the stock market sucks. Real estate is the only way to make money. No, not true at all. The difference is you simply don't understand the stock market. Think about this logically. Warren Buffett is one of the wealthiest people in the world did it entirely in the stock market. Some of the wealthiest people in the world are hedge fund managers. The most billionaires are hedge fund managers. You know that? People who manage. Yeah, that's the
I didn't
most.
know, actually.
Yeah,
A lot of them have a real estate side to them, but they probably know a little bit of both, even, right?
Correct. And that's what I'm encouraging people to do. I know both worlds, and I'm telling you guys, when you learn both asset categories and you know how to allocate capital from one to another, you can do some really cool stuff. Can I give an example, Sandy, of something I think that I used in the past that your listeners could benefit from?
Absolutely.
Okay. So here's an example. Okay, guys. And Sandy, think of this logically for yourself. Okay, so let's say you have a property, okay, and it's coming up for refi. Okay, great. And you can refi, let's say, just for the sake of simplicity, 100K. All right. Well, we know that 100K, let's say we borrow that money at, 2.5%, just theoretically, okay? Yep. All right. Let's just say I borrow that money from TD Bank. Fair enough? Yep. Okay, so I do a mortgage with TD, I borrow it, they give me 100K on my property as a line of credit or an increased mortgage, whatever. All right. Now, let's just say I agree to buy TD stock. I don't do anything else. And I'm going to get paid a lot of money just for agreeing to buy their stock, okay? And let's say things go really bad for me. And I agree to buy their stock and I have to. TD pays me a dividend of 5.5% almost, okay? Just to hold their stock. And they've never cut their dividend in the history of their company during even the 08-09 recession, during the current pandemic. So logically speaking, my worst case scenario is positive cash flow. I'm borrowing money from TD at 2.5. I'm buying their stock, which is paying me 5.5. So my net positive cash flow is 3% a year, plus all the appreciation that I receive on TD stock over the years, plus all these premiums that I collect through naked puts and covered calls. So I can make a boatload of money on TD by borrowing money from TD. Can you imagine that? So it's kind of cool how that works. But if you don't know how that works, how can you possibly take advantage of that? And that's what we're trying to teach people, how to take advantage of situations like that where you can do it. And that's not advice. I'm just telling you that's a cool trick. That's what I've used in the past where I borrow money at a lower rate of return, lower cost, and I invest it at a higher cost. And again, I'm very comfortable with TD as an asset and as a stock, or let's say an Enbridge. How many Enbridge bills do you pay?
Enbridge.
I pay tons of Enbridge. Yeah, me too. Bunch. Yeah, me too.
Thankfully,
right?
I don't do it myself because that'd be a lot of
right. Job. Now here's the cool thing with Enbridge. Okay, so Enbridge again, same thing. Let's say you borrow money at 2.5%, and you just agree to buy Enbridge stock. Okay, and you'll get paid premiums just for agreeing to buy their stock. Now let's say things don't go your way and you have to buy their stock. It happens. Enbridge pays 8.1% currently just to hold their stock.
Wow.
Not just to hold it. Nothing more. And again, they've never cut their dividend. So this is why we stick to these really high quality companies, these dividend paying companies, because literally you can borrow money and run positive cash flow as a worst case scenario, provided that company like TD or Enbridge doesn't cut their dividends. Now they never have in the past, but that doesn't mean some sort of cataclysmic event can't happen in the future. We get hit by something, and who knows what could happen. But it's never happened in history. So I'm really comfortable with that level of risk, and that's a cool trick you can use when you're combining real estate and the stock market.
Awesome. That's really insightful, I think, and it gives the people a good perspective on that. I think we're going to bring on another guest here in a minute, just get some of their input on how they've been enjoying this. What I'd love to hear first, though, before we do that, just obviously there's got to be a way that people screw this up, or otherwise everyone would be doing it forever. What's the catch, so to speak, where people? I think there is no catch, but there's a way that people get a little aggressive, or they get in that gambling type of mode, and they go and they make some sort of mistake that really, really screws this model up. What does that look like? How do people screw this up? Like, what do they do?
Yeah, and people do screw it up, and here's how they screwed up. Okay, so the idea is to stick to high quality companies and get paid 1 to 3% a month. Okay, that's the idea, and that's what we do. Okay, but Sandy, now tell me if you look at some let's say cannabis stock, okay, and instead of getting paid 1 to 3% a month, let's say instead of getting paid 2% a month, that cannabis stock is paying you 15% a month just for agreeing to buy it at a discount.
Right, it's attractive.
It's attractive. That temptation is there. And there's a saying in the stock market: bulls make money, bears make money, and pigs they get slaughtered. Okay? So the idea is not to be a pig. So let's say, for example, you agree to buy one of these crappy companies that you know nothing about, that you don't really want to own, but you're so tempted by the amount of money you're receiving by agreeing to buy it for discount that you do it. So You can mess up if you do it with risky stocks. Okay, and we never do it with risky stocks because you just don't know if they're ever going to recover. Like everybody remember a couple of years ago, everybody was buying cannabis stocks. Everyone and their cat. Oh, this cannabis stock is going to go to the moon and back. It's legalized, blah blah. These cannabis stocks are almost bankrupt. They're almost in the toilet now. Okay,
and there were some people that did hit a home run in that world and made it big, but.
Again, it went up and then it went right back down again. Now, right. if something goes up and back down again, it's no longer an investment strategy. That's called guessing. It's called hope. Yeah. Hope is a horrible investment strategy, right? You just don't do it. So let's say you agreed to buy those riskier stocks, and instead of getting paid, let's say 2% a month, you got paid 10% or 15% a month. That's one thing, that temptation exists. So you have to control yourself, saying, no, you know what? I'm going to avoid the temptation of this 12% return, let's say, for the month, and I'm going to take the 2%. Right? So that's one way you can screw it up. Another way you can screw it up is, remember I give you that example where you borrow $100,000, let's say, on a line of credit against one of your properties. Okay. When you borrow $100,000 and you invest it in if you have an options eligible account, well, you can actually take that 100,000, Sandy, and turn it into approximately 333,000. Okay. So they'll allow you automatically to leverage yourself. It's an automatic thing. Okay. Like they check your credit, and as soon as your credit's checked and they verified you that you know what you're doing, you put $100,000 in, you can trade $333,000 of stock. Right? Now imagine making $333,000 in stock and you're making $2,000 a month, 2%. That means you're making $6,600 on your $100,000. Right? That means you're making 6.6% a month. Right? That'd be almost 100% a year if you're compounding it. Right?
Oh, yeah.
Right, and you're sticking to safe stuff. Okay, but the problem is you're no longer at $100,000. You're playing with 333,000. And leverage works on the upside and it works on the downside. Right. Same thing with the real estate market. So if you lever yourself up in the stock market, and the pandemic hits, and you have a 35% correction, if you leverage yourself up all that 333,000, you lost 35%, you're fully wiped out. You are at $0. You are done, and the game is over for you. That is the real two ways you can mess up. It's basically greed. As long as you can avoid greed and temptation, you can do really, really well. But
which isn't easy necessarily, right, for the general public.
But so you have to assess your personality, saying, am I someone who can control myself, or am I a loose cannon and this is not for me? That could very well be the case, because in the real estate market, you can't just access your capital. Right? You can't just go and grab a bunch of money and lever it up. It's not how it works. You have to go through this whole rigmarole of the banks and blah, blah, blah. And I've been there, done that many times. I know how difficult that is to deal with the banks, but it's a different world.
Yeah, so I think that's where the get rich quick people probably will struggle, because that's not the strategy, right? It's a consistent cash flow earning strategy that is just like real estate too. It's not a get rich quick scheme. Maybe there's ways to do that, but that's not the model we're talking about here.
It's not the model. Yeah, we don't use that model.
We're talking about real consistent money making strategies here. So I'm gonna bring in Martin Kuev here to join us here.
What's up, Martin?
Hey, how's it going, Omar?
Good. How you doing, bud?
Good.
Fantastic.
So to give some perspective here, Martin's actually past a guest of the show, so happy to have you back. We won't get into your full story there, Martin, today, but you are definitely, at least in the last few years, you've been primarily real estate investment focused, and spent a lot of time educating others, educating yourself on the real estate market. I know you're well versed in that. And then correct me if I'm wrong, just this year, right? Just leading into the whole pandemic thing is probably when you got into this whole strategy with the options trading. And why don't you tell us a bit about why you got into that, maybe what that's looked like, and what the results have been, even through a weird year here, 2020.
Sure. Yeah, I got introduced to it, I'd say, about a year ago. And like anybody else, I heard stocks, and I'm going to keep my distance from this one. And I think I did that for quite a while. And then I started to see a lot more real estate investors out there, and them trying to use this strategy. And it kind of, the biggest thing that switched for me was one of my electricians on one of my buildings is actually a theta trading client. And I think they started out and they did quite well. And that's someone coming in that may potentially not have a business background or a stock background and doing extremely well on it. That kind of made me think, hey, there's something here that I may want to learn a little bit more on. And then I went on and I took the introductory course. And then subsequently to that, I took the advanced course. And that was all, I'd say, in the tail end of last year, started into January of this year. So I started trading right before the pandemic.
Awesome.
How'd you do?
I heard at the beginning for sure. When I first started out, it was, but exactly what they teach you is you're looking at a stock that you're going to be okay to own if it goes down to a certain price. And I was okay with that. Obviously you're going to get afraid for it. And he mentioned leverage before, and you have to be very cognizant of that. That did hit me at the beginning. I'll be quite honest, is I didn't understand how margin worked within the app. But so do your research first, and potentially play with some play money at the beginning to understand it and get a little more versed with it. And then you really understand margin and how much you can utilize margin to your advantage, and just be very cognizant that it could be there as your disadvantage as well if you lever yourself too much. But yeah, I went just prior to the pandemic, and it hurt at the beginning. And as things went up, the great thing is this is like an income producer. It's like your active income, where real estate is more your passive income and your long-term wealth generation. On this one, it's you chip away, and you basically, I went from negative quite at the beginning to quite a good positive return over the last 6 months, or from when I first started out.
And that's through so you made good money through a pandemic.
Correct. And that was probably the turning point for me, is I go, hey, this is a great learning tool if I can go through the pandemic and still have appetite for it. Because I know a lot of people, especially with real estate, something goes wrong in the first 3 weeks and there's a for sale sign on that front lawn. You back out very, very quickly without really understanding what are the things that you can do to change it. And I'm lucky I stayed within it, and I still had great belief in the system. And luckily so, you go through the pandemic, and as long as you don't lose that why you got it in the first place and the long-term trends of the market, that's what you want to be your friend, rather than this short-term blip.
Awesome. So overall, pretty good experience, kind of interesting timing for you. I think it's almost going to maybe help you in the long run. You've probably learned a lot this year. And what's the plan going forward then? What are you thinking about this strategy? How are you utilizing this to build your wealth long term?
Yeah, for me, long term is still a real estate investor. And I think Omar and I are flipped. Like, his primary thing is stock options, and he has real estate investment on the side. And I think that goes to show the diversity of it. And for me, I'm a real estate investor first and foremost, but this is a great side strategy to utilize some of my funds that I currently have dormant and having them go to work. We're apartment building investors, and we put money into those things as well. But having a good amount here within this strategy and seeing what you're building, it's great to have both. And as I mentioned before, one's active, one's passive income. So, and I can pull the lever on each one of those as much as I'd like.
Isn't it so cool, Martin, to understand both asset categories now, though? Right? Before, you just dismissed stocks and said, I don't want to even worry about this world. Now you know both. And now you know what your future is going to be like, because now when you understand both of these asset categories, you can really grow your real estate portfolio at a quicker rate than you probably would have before. And
that's the key. That's, for me, it's when I heard other people first heard about this, and it was real estate investors, I haven't been as excited about an income or long-term wealth generation strategy as I was when I first heard about real estate and the power of what real estate can give you. I was equally as excited when I started to learn this. And I didn't come into this not knowing stock options. I traded them in university, but I realized I was probably trading like I was a kindergarten student, rather than understanding them and not trying to hit a home run every time, but basically trying to hit singles and getting consistent returns through it. That was an eye-opening experience for me. But in all honesty, for looking at real estate and this strategy, I'm as equally as excited about short and long-term wealth generation on both.
Yeah, I agree. I love both asset categories too. And it's so important to learn both, because when you learn both, you can do some really cool stuff and get your, advance your retirement by years. Here's another thing, Martin. Eventually, the thing with real estate, it's active. It takes a lot of time, right? Like, there is work involved. Like, you have to deal with people, tenants, property managers, insurance companies, banks. The stock market, it's just you and your phone. There's nobody to deal with, right? You don't have to talk to anyone. You can sit on a beach and just look at your phone and do your thing and not talk to anyone. So it's kind of different that way. I think one day you might find, Martin, down the road, a few years from now, when you're closer to your retirement, you're like, you know what? I think I'm just going to sit on the beach with my phone and do nothing else.
We'll have that chat. I know we chatted about that before. And it is. The great thing is that what I didn't have 3 or 4 years ago, I have options now. Yeah. I can look at both, and that may be the case, but right now I look at them both as equally as good. And obviously I have background in real estate, so I'm going to continue there. But I got to tell you, I have ramped up on this side of it for sure. Yeah, and you should continue to ramp up over the years, because it produces an excellent amount of income. Even through a pandemic, you made money.
And that's a good litmus test, right? If you can make money through a pandemic, a 35% correction, and still come out on top, that's a good sign.
Yeah, that was the turning point for me. It pushed the longevity of it for me. Is going that, hey, I know exactly short and long term what's going to happen, but if I can do this during a pandemic, I can very likely do it during normal times.
Nice.
Awesome. Well, thanks for stopping in here, Martin. Really kind of helped solidify a bit of these
Thank you.
your experience. Yeah, it's obviously been interesting to chat, and happy to hear you're thriving through this. And I guess one last quick thing. I mean, obviously you went through the courses with Theta Trading and Omar's group there, and obviously I assume that's been beneficial. You said you were trading at a kindergarten level back when you first did this, and now you're probably at at least maybe university, grade one. Yeah. At least you know a little more. So I assume that was helpful for you. We're going to get into it with Omar here in a sec, just about how people can get involved in that side of it. But
this is 25 minutes to it's a great forum like this to just say, hey, has a seed been planted that there may be something you want to learn more about? And then once you take that course, a lot of these check marks gets filled out, and you really understand it a lot more. So I can't speak enough about what I've learned through taking those courses.
Are you going to continue to trade for the rest of your life, Martin, now that you learned the skill?
Likely, this will be a permanent stand-hold in terms of what I do, for sure.
Yeah, I don't see any reason why it wouldn't be. It's done you quite well even through a pandemic, and it really supplements the real estate, because the real estate, again, my opinion, if you really want to build real estate, you continually have to kind of lever yourself, and the cash flow is not the best, but cash flow is the fun part of life, right? Where you can blow it and have a little bit of fun, right? Enjoy little toys here and there. Wealth creation is what you leave for your children one day, right? Or your retirement fund. But the cash flow is kind of cool because you can actually spend it and enjoy it with your family. So.
It is, yeah. And we can talk about the merits of real estate in this one. And the great thing is they both have really solid fundamentals and really solid strategies behind them. So I'm just glad to have both of them in my arsenal.
Awesome. All right. Well, thanks, Martin. Thanks for stopping by. Thanks for sharing your experience here, and we'll chat again soon, man.
Thanks a lot. See you guys.
See you soon, Martin. We'll talk soon, bud.
Sounds good.
All right, awesome. We might have one more guest coming in. I don't know. We haven't seen him pop in yet, but we'll
you're next, Sandy.
I'm next, probably. Yeah, you're right. I gotta one of these maybe by in the next 6 months I can come on and share my my awesome experience with it all. But
you got to make a personal mission to teach you the stock market.
I know. There's so many things to do. This thing is exciting. I agree for sure that it's well worth being a part of. And I do hear that Mike's probably coming on here in a sec. There he is, there coming in. So we're gonna get him in. Maybe let's get one more input on this. I know he's been one of your students as well through this. So we'll get his experience in a sec here, and then after that, we're gonna dive in and finish off with how people can get involved, obviously with your trainings. And actually want to hear a little more about your lifestyle in this environment. You touched on it there with Martin, hanging out by the beach. I know you got stories about trading a quick deal at Wonderland, or not Wonderland, but Disney World, yeah, things like that. So it's a pretty sexy lifestyle, I guess, in a way, compared to the real estate investment world, which is sometimes messy and a lot of moving parts. So yeah, maybe we'll touch on that after. But let's bring on Mike here. Hey, Mike, a bit about us.
Hey guys, how are you?
Good. How you doing?
Good.
Hey, so Mike's been also a former guest of the show here, and obviously a pretty active real estate investor. He works with our group here in Hamilton primarily. And Mike, brief background on your real estate investment journey, and then how you got intrigued by this other strategy, and what that's looked like so far, your journey in that.
Yeah, so started investing in real estate coming up on 5 years ago, and we just bought our 10th house 2 days ago.
Fantastic. Yeah, that's really good.
Yeah, it was a nice little milestone. And with you, Omar, I saw you at the Wealth Hacker conference, and honestly, I didn't really pay much attention when you speak. I apologize for that. And it was
no need to apologize. Don't worry. Don't need to apologize.
I was not interested at all.
Most real estate guys are like that. They'll be like, I don't even want to know about this stuff. I know real estate. I'm going to keep it that way. But now tell me, now that you know, was it a good move?
100%. It's amazing. Sandy, when I retire, you have this man to blame.
Because you're gonna go faster now, right? That's
I've blown away. I have Cam McCarroll to thank for it. He used to call me every single day and hound me about signing up for the course. Yeah. So right at the beginning of the pandemic, when we were all on lockdown, I finally signed up, and I was blown away. Like for me, I always tell people this, that 5 years ago, the coolest thing I'd ever been exposed to is buy, renovate, refinance strategy. Now this is right on par with that. So it took 5 years to get this information, but I fully intend to run with it.
You got it for the rest of your life now, Mike. Nobody can take this away from you.
Yeah.
And so you joined in. You did Omar's course, right? Have you done the advanced one yet, or no? Just the initial one, right? Or which
just
one,
the initial
which ones have you done with Theta? Okay. And so
we only have two. We have the introductory, and then after you get a bit of experience and you get good at it, then there's an advanced course that you can take if you want to enhance your knowledge. That's 2 courses. That's it.
Yeah.
I'll see you on that advanced course soon, Mike. I want to take your knowledge to the next level.
I want to take it. Right now, I'm a huge amateur when it comes to the technical analysis. I basically just look and see if the 50 days trending above the 200 day and the stock's trending up, and then I go look at your the emails you send out and see what you invested in.
Right.
And
what's the worst that'll happen to you, Mike? What's the worst case scenario?
I got assigned once, and I'm paper trading at this point, but they give you $1 million to start with, and so far I've made 160K in 5 months. So it's insane.
So a 16% return in 5 months through a pandemic.
Yeah, it's nuts.
Yeah, it's not bad. So and that's all cash flow, right, Mike?
Mm-hmm.
Right. That can be a fun amount of money to play with.
Yeah, I love it because Sandy, with the buy, run, or refis now, before I used to be a little apprehensive about pulling out all the capital, especially when you get a massive appraisal.
Right.
So now it's like suck every last drop of capital out of them and rely on trading to provide cash.
And the reason is, Mike, because now you understand both asset categories. When you didn't understand the stock market, you left your money in an inefficient use of capital in your property because you didn't know where to put it. So you're like, you know what? Let me just leave it here. But now that you understand that you can allocate it more efficiently, now you have a whole new way to make money, which is really awesome, man.
Yeah.
So
I was just going to say, when is the advanced course? Because I actually do want to sign up for that.
Yeah, the next one is September 19th and 20th, and the next one after that will be in January. So sign up for September 19th and 20th. That'll be the last one for the year. And the price also, I'm not just saying this, the price will be going up for the January one. So okay. I'm not just saying it, just, yeah, if you want to take your level to the next, your knowledge to the next level, the next one is 19th and 20th.
Awesome.
Yeah.
Awesome. So I think, we'll get into that in a sec here with your Omar, but Mike, how do you see this playing out going forward then? How quickly are you going to retire? Because I need to start planning.
So here's the way I look at it. I love selling houses and I love investing in houses. So I don't know if I'll ever stop doing that. But right now, Sandy, I'm tied to you. So if you wake up tomorrow and you decide, hey, Mike's not a good guy anymore, I'm in a tough spot where this makes it not matter so much. Same thing as when I worked in corporate. If I woke up one day and showed up at the office and my boss didn't like me anymore, I'm out the door. So I think all of us need some kind of protection, and the extra stream of income is what provides us with that.
And it gives you a great extra stream of income. To your point, Mike, I left corporate in 2014, so 6 years ago. And the only way I was able to leave a high-paying Bay Street job, I had 3 kids at home, a 6-year-old, a 4-year-old, and a 2-year-old, and I quit. Do you know how hard that was to do? But the reason I was able to quit is because I had a good amount of real estate and I knew how to trade. So once you have it in your head, nobody in this world can take that knowledge away from you. And you can, if you get fired, you want to create an extra income stream, maybe that business you always want to start, maybe you want to retire early. It gives you tons of choices.
Mm-hmm. Yeah. We always think about our why. I'll probably never retire, but I want to have the ability to very soon.
Yeah, I agree with you. I'll never retire either. I'm going to teach Theta until I'm dead. But at least in the back of your head, you know that, hey, if I want to pull the chute any day, I can. And that's a good place to be in.
100%.
Or just go take a year. Maybe you want to go take a whole year off or something. Go travel, and you're not retiring, but you're just going to go have a, whatever reason.
It gives you choice. It gives you choices in life, and that's what we all want: choices.
For sure.
All right, awesome. Thanks for stopping in, Mike, and your sharing your experience there. Tons of positive experiences, I know, for this, Omar. But we'll let you get back to it, Mike. Thanks for sharing. Right. And
thanks, Mike.
Thank you, guys.
We'll see you soon, Mike. Thanks, bud.
100%.
So obviously some great experiences there. I think there's I don't know how many more you got, hundreds, thousands, whatever. But
Yeah, we have hundreds more. We started this company 11 months ago, and we taught about 700 students so far. And if you guys want to take a look at our reviews on Google, just Google Fader Trading reviews. We have 111 reviews, and 111 out of 111 are 5-star. And the common theme amongst the, like, if you read the actual comments, is game changing, life changing. You know, it's completely changed the way I think about money. And a lot of these people, by the way, I'd say at least 50% are real estate investors.
I know, yeah, you've been tapping into that pool, which is an interesting one. It makes sense because they're investors already, and they have some, obviously, as a client, they're probably, you know, they have some funds to dive into this, and they're interested in learning, but at the same time, they're also very kind of opposed to it in a way, right? Because real estate world tells you all day long, don't. Stock market's too risky. It's all volatile. Real estate's safe. It's always growing, right? So there's that hurdle to overcome. But I'm sure, you know, you get a few people on board with this, and it just makes sense, right? At the end of the day, and the knowledge is there, which is the biggest thing that you have for life, as you keep saying, right? That's
correct. Yeah, correct.
So what's it look like? What's the courses look like, and how do people get in on that? And then I know you're doing webinars now. Is that right? You're obviously not doing a lot of in-person events.
Yeah, we're not doing any in-person events. So prior to the pandemic, we were doing in-person events at my alma mater, U of T. So we would go to University of Toronto, and we would do an in-person live class. Pandemic hits, complete business model change. We switched entirely to online, and the online format has actually been really, really good, because now we're teaching people from, like, you know, Victoria to Halifax. We have a few Americans on our courses every month. We're starting to get international students. I don't know how they're finding out of us, because we've never advertised outside of Canada. I think that's mostly word of mouth, but it's been really, really cool to see the evolution of this business, and to see how many, you know, I'm so fortunate, Sandy. I get to do something I love every day of my life, and I couldn't ask for something better. Like, you know, when I get a message from someone like, you know, like Martin or Mike, and, you know, hey, you changed my life. There is no greater feeling professionally when someone tells you that. It makes you feel so good about what you're doing, and it gives you that positivity you need to continue to go forth and improve. So
absolutely, because I know, you know, entrepreneur in business, it's there's some days here and there where something goes, you know, a little off, and it's a tough thing. But those testimonials and hearing about that really fuels you for months at a time, right? So it's great to hear.
Yeah.
The courses then, so we talked about the courses, right? So there's the introductory version of it. Is that totally then over a webinar style, and how often do those happen? Where can they actually go to see information on that?
Yeah, so what we have is, we have an introductory course which takes someone who doesn't even know what a stock is, okay? And by the end of, we have a 2-day format, so Saturday from 9 to 5:30, Sunday from 9 to 5:30, so it's a whole weekend. You'll have access to the recordings online. So if you'd missed a bit, you can always just watch the replay, so that's not a problem. So you do the 2-day course, okay? And then we have 6 months of support, like Mike was talking about. We send out a daily newsletter that talks about the markets, you know, interest rates, what our trades were for the day, all that stuff. We have a weekly coaching webinar where you can ask questions. Hey, I don't get this, or I don't get that. We give you that for 6 months. And, you know, so you get the weekly coaching webinars. We also have a private Facebook group where if you just put a question, hey, I didn't understand how to do this trade, or what did I do wrong here? And then there's almost 600 people there to answer your question. You know, former students, myself, Matthew, and people are more than happy to answer these questions because they were once in that position, right? So we have the introductory course that's 2 days, followed up with 6 months of support, and that should give you plenty of support to do what you need to do. And then we have an advanced course, and I think we've taken about 150 students through our advanced course, and that's for the people who say, you know what, I'm making some pretty good money doing this. I really want to take my level to my knowledge to the next level, and we have an advanced course for that, and that's it. Just the 2 courses. You know, what we don't have and what we will never have. You know, I took a course years ago, Sandy. I don't know if you've ever experienced this, but I took a course, and I was the victim of financial literacy my whole life. No one ever taught me how to make money. I had to learn on my own. You know how hard it is to learn the stock market on your own, by the way? It's not easy.
I've tried. I've quit really fast. I didn't really feel like going down that road, but yeah.
Right. So it's learning it on your own, I can assure you, is a horrible experience, and it's very expensive, quite frankly. So I learned it on my own, and that's why we created this company, so that other people don't have to learn it the hard way. They have to learn it. You know, we've taken 22 years of experience for myself and Matthew. It's 44 years combined. We've compressed it into a course so that people can fully grasp and understand this. Now, that being said, you definitely need to put in the work and the effort to learn this. Just like real estate, it's not like you just walk into real estate and over one weekend you're gonna oh, I totally get this. I know I can buy I can buy apartment building now. It's not how it works. You gotta build yourself up. Same thing with this. You gotta educate yourself and learn and experience and practice. But once you get it, you got it for the rest of your life. So how do you sign up for it, by the way? If you guys want to hear more about the strategy, we have a free 1-hour webinar that we do 2 to 3 times a week. For more information, you can go to 30minute, that's 30minutesstocktrader.com/breakthrough. Okay, that's for the Breakthrough podcast. And what we're going to offer you is we're going to show you how by the way, this only takes us about 30 minutes a day to do. Okay, because once you agree to buy a stock at a discount, you get paid for it. There's not a whole lot more to do after that. Either you'll have to buy the stock or you won't. And that could be 30, 45 days from now. So it doesn't take us a lot of time, which is another really cool thing. And for any Breakthrough podcast listeners, we're offering a free investing consultation to help you assess your investment goals. We're going to talk about, if you want to talk about your real estate and and how stocks can play into it. Because remember, I am a real estate investor. I know a lot about real estate, and same with Cam or Matthew, my business partner. He also owns a ton of real estate. So we are definitely real estate people. But we're going to show you how you can actually incorporate the stock market, and specifically options trading, to help you grow your portfolio and help you get to your desired outcome quicker. So just to reiterate, guys, 30minutesstocktrader.com/breakthrough. Okay.
Awesome. We threw that in the chat box there too. So if you're watching with us right now, you can check it out there. Go click on it right now and get in on the action. Or if you're listening, you can hopefully, if you're driving, pull over or stop what you're doing, go check it out and see how you can get involved. I've got a special deal there with you as part of our listenership there. So appreciate that, Omar. It's awesome. And what are the expectations coming out of this show? And then I want to hear a little bit about, or not out of the show, out of the courses. What do people expect? They go, they learn all this stuff. What's their action steps afterwards? What's the expectation on them? After that, is it they expect to go into the market and start to just make it rain and bring in a bunch of dough, or they have to obviously learn a little bit? It's going to take them a little bit to get into it, or what does that usually look like?
Yeah, what we encourage people to do is after you take the course, open a paper trading account. Okay. They'll give you $1 million of fake money, exactly what Mike was describing. Give you $1 million of fake money. Everything is real. The stock market's real. The numbers are real. Only thing that's not real is the money. Cool. Okay. So if you're gonna make a mistake, make it with fake money. Now Mike said he's up 160 grand, which is a 16% return in 5 months. Now it's fake money. That's fine, but that's not the point. Now Mike has a lifelong skill which no one in this world can take away from him. Okay, so eventually when he moves into real money, he will. It's different with everyone, Sandy. Some people we have after the weekend course, they are literally trading on Monday. And they're like, holy crap, this has changed my life. I can't believe it. And you're like, whoa. And then you have other people who take months. But that's not, it's you go at your own pace. It's whenever you're comfortable. So I would suggest you take the course, you learn it, and then you start paper trading. And you'll know in your gut when you're ready to move forward with real money. So that's what I would suggest. You'll know, you'll be like, you know what, I get this game now. Like Mike's probably at that level right now. He's already made 160 grand through a pandemic. Can you imagine 160 grand up during a pandemic, a 16% rate of return through a pandemic? Not easy to do. Okay. Mm-hmm. So, but he clearly understands the idea now. He knows that, and it's not like, it's not a get rich quick scheme. You're going to make small incremental money that adds up to a lot over time, right? That 1 to 3% a month. Like if you do 3% a month, for example, that's north of 40% a year. That's a lot of money, right?
Not bad.
Not bad, right? So this is something that you will have for the rest of your life, that you can use for the rest of your life. It's not something that's going to go away. So long term, it's like I said, it's a great strategy to supplement your
marrying that up, right? You get the real estate. If you're getting maybe 20 to 30 is a really great return if you're just looking at the real estate investment side of it. Well, that's very minimal or no cash flow, right? And then add on a 20, 30, 40% return on this marry those two together. I mean, it's a pretty incredible wealth building kind of portfolio of wealth building strategies you've got there. So I think it's amazing knowledge and amazing way to go about this, and obviously put together a great platform for people to learn and grow with that. And we're hearing some awesome experiences. So that's awesome to see. Congrats on all that effort you put into there. I know it's probably not been easy to gain the traction, get the programs together and all that, but it's obviously working. So
it's actually been word of mouth, Sandy. It's been like, you teach one person and they're like, oh my God, I got to tell my friend, and they tell their friend and they tell their friend, and we're growing.
It's that impactful, right? It's that big of a, it's that cool of a thing. So
yeah.
So what kind of to round it out here, the conversation, and maybe give some people some inspiration around it. What does your lifestyle typically look like? And I know you spend a lot of time with training and helping people get into this. Even aside from that, I mean, what were you doing before you started teaching this? Like when you were not working in corporate world anymore, you weren't necessarily doing this. You were, what were you doing day to day? Like you're
building my real estate portfolio.
30 minutes a day kind of thing. Like that's not much.
Not that much. So just building my real estate portfolio and trading. And then a year ago, my business partner, Matthew, we said to ourselves, hey, what do we want to do the rest of our lives? It was a really, it was a come to Jesus moment for us. Like, what do I want to do with the rest of my life? It's a tough question to answer. You don't know. You're like, I don't know what I want to do. Right. So we
30 minutes is not taking up much.
No, it's not taking up much. That's the whole problem. And you can't sit at home all day long because your wife's like, what are you doing? You don't do anything. And you're sitting at home. What do you do? And that's a problem, right? So we had taught about 50 to 100 people how to trade just because we love to do it over the years. And we taught them for free. We taught them way before we even decided to come up with data trading. So last summer we said, you know what? Why don't we teach people how to trade and we'll see if they like it. We didn't know if people will like it. And a year later, it's been an overwhelming success. We've taught 700 students. And you like read our reviews, Sandy, if you ever get a chance to. And it's been the whole, people like Martin and Mike, it's changed their lives. And we are going to teach thousands more because I had no idea a year ago when I started this company that there would be this much of a need for financial literacy in the stock market. But I realize now that it is such people don't know anything about the stock market. And if they do, it's very convoluted. They don't know what they're doing, why they're doing it. It's just guessing and hoping. And that's why it gets such a bad name. So once you figure it out, you're like, wow, now I realize why some people in the stock market make so much money. But it's a matter of getting it. It's not like real estate. Real estate is very forgiving, Sandy. Very forgiving. Okay. If you screw up and buy the wrong house, okay, and it doesn't cash flow, or you have something breaks or something, it's forgiving. You're gonna hold it for a long time. It'll probably eventually recover. The mortgage is gonna pay down. You might get a bit of cash flow. It's very forgiving. Okay. When you pick a crappy stock, it might not ever come back up again. Like ever. It might be down forever. And you're gonna be like, oh, this sucks. I don't want to do it anymore. And that's the reason we stick to these really high quality names and trade the way we do. But it's just a matter of understanding things.
Awesome. So obviously something that hopefully our listeners can take action on and get excited about. I think that's why we've had you back on here, because we've got some good feedback from earlier and got some people
I appreciate that,
really excited about joining what you're doing. So I want to endorse it too and encourage people to go check out what you're doing. 30minutestocktrader.com or .ca.com. Right?
Yeah.
/ breakthrough, get in on the action and check out your next webinar. When are you doing them? Are you doing them weekly, monthly? How often do they happen?
The courses are monthly, but the free 1 hour webinar, we'll go through an example of what the strategy is, how it works. We'll go through a real life example. So that we do 2 to 3 times a week. And you can get that at 30minutestocktrader.com / breakthrough. You can sign up for the next free 1 hour webinar and just listen to the free 1 hour webinar. And then you can decide whether this is for you or not.
Awesome.
But you're next, Sandy. You're next.
Give me like 6 months a year, and I'll come on here and we'll do another show and we'll talk about all the awesome success I'm having, and maybe I'll be swimming in money, and we'll make fun out of it.
It's not so much swimming in money. What it's going to do is going to create a lot of extra income for you. It's going to help you grow your real estate portfolio. And let me ask you a question, Sandy. You personally, how many people do you know who are trading now who weren't trading a year ago?
Dozens, at least, I would say. Dozens.
And what have you heard from them?
I've heard pretty much all positive. The only two people I've heard, and they don't say anything negative about it, they just talk about themselves, and it's their own fault where they've gone against the guidance or the strategy, right? And they've tried to get a little too creative, or they've tried to get a little too outside of this strategy. And obviously that's probably
and we teach people during the course, don't do this. We'll tell them stay in these parameters. But you can't control people. People are like, oh, maybe I'll just go over there and see what this is like. And then they get, but for the most part, dozens of people now who do this. A year ago, you didn't know anyone who did it, right?
I knew you were doing it. I didn't know many others, if any.
Yeah, myself, maybe Mark. That's it.
Mark,
right?
yeah, a couple others.
Yeah.
Yeah. Not many though, not many. And that's why I think you're doing a great thing by pumping it up more, sharing the knowledge, getting it out there more, because why not help impact that many people, right? You said 700 plus people, like,
yeah, and in less than a year.
Yeah. So why not double, triple, 10 times, whatever that, right? And get that out to more people so they can learn. And obviously it's not all about money, but if you have a lot of money, you can make more income, you can do a lot more cool things in life, and live an awesome life. So that's what we're hoping people can get out of this. And again, really appreciate you coming on and sharing all this info. And
thanks for having me on, Sandy.
Hopefully look forward to seeing more of our listeners joining in on the courses, on the webinars, and learning from you and your team there at Theta Trading Co.
ThetaTradingCo.com. And I was going to leave you one last comment, Sandy.
Awesome.
Yeah, when I'm going to make a personal mission to teach you how to trade. Okay, so whenever you're ready, you let me know. I'm going to teach you how to trade, because I want you to become an advocate like everybody else, and then you can talk about how it's impacted your real estate life, and you'll know how to allocate capital back and forth between the two asset categories. So,
I agree. I'm in for it. I agree.
Fair warning, man. You're next. Okay.
I agree. I do need a little tiny bit of accountability around it to fit it into all the other stuff. But I definitely am very keen on doing it. So let's talk more offline and make that happen. And otherwise, again, thanks so much for being here. If they want to reach out to you, and is any other place to get you, or is the best way 30minutestocktrader.com? Is that where they get all the info, and any other place to reach out to you or get
yeah, you guys can email me if you want at Omar at ThetaTradingCo.com. So Theta Trading, my hat says ThetaTradingCo.com. So Omar at ThetaTradingCo.com. If you have any questions, I'll be happy to answer them. Okay.
Awesome. And if you want to reach me, it's 289-389-6846. You can also reach out to us at the show, info@breakthroughreipodcast.ca. And again, share with us what you think about the show, what you thought about this value here in this show, and what we can do to improve and keep going and create more great content. So thanks for tuning in, and we will talk with you again in a week.
Thanks, Ed.